Hey everybody, what's going on? Welcome back to Third Wave Trades. Today we're going to be doing a complete technical analysis breakdown on Tesla, ticker symbol TSLA. As you guys know, we've been following the stock for a while, primarily looking at it in terms of its Elliott wave count. We're going to do an update on that wave count going into the macro and micro structures, but I'm also going to take a look at it in terms of just its overall price action. We'll take a look at some of the moving averages. We'll take a look at it also in terms of Stan Weinstein's stage 1 and stage 2 analysis. If you guys don't know what that is, I'll give you guys a brief overview of that. The Wyckoff method in terms of its reaccumulation schematic. We'll go over some basic chart patterns besides the bull flag breakout. If there's anything else that we can recognize, talk about some key resistance levels that are coming up and any supports that we have, supply and demand zones, and then what I think is going to be really important is we'll go over a little bit of Pitchfork Analysis and see what are some support and resistance levels according to the Pitchfork Analysis. And then, like I said, we will go over the Elliott wave count and we'll come up with some possible price targets after we go over the macro and micro structures. And a very important thing, guys, that I want to really share with you guys is the fractal structure of the market. And I think I have something really cool and neat to share with you guys. All right, so we'll get started. But guys, first, quick disclaimer: I am not a financial advisor. This is not financial advice. Please do your own due diligence and research and or consult with a financial advisor before making any trading or investment decisions. Secondly, guys, if you could, please hit the like button down below if you guys find the content useful, and please subscribe to the channel if you guys want more Elliott wave breakdowns on your favorite stocks, cryptos, and commodities. All right, guys, so we're gonna start off with basic price action and volume. And basically, I'm just gonna go down this list right here. So I'll leave timestamps for you guys if there's some things that you want to like just forward, because the video is gonna be a little bit long. But I'll leave timestamps for all of these in this order in terms of these contents. All right. All right. So let's go straight into the price action then, and we'll just start off on the weekly. All right. So as you guys can see, we've had a very strong rally. We've had about 9 straight weeks of just moving up overall, and today we had a really strong pullback, right, which has created this bearish top candle over here, right? So again, this is the weekly. We're gonna go over the daily in a second, but overall on the weekly we are above a very important moving average, which is our 30-week moving average. And that's actually going to be really important when we go over Stan Weinstein's stage 1 and stage 2 analysis. So I'll talk a little bit more about that. But overall, we are still in a bullish uptrend, right? You guys can easily draw like a trend line and see that we are still bullish. Now this pattern right here is somewhat concerning, but we still have 2 days left in the week to change this pattern and finish a lot higher, erasing this basic shooting star pattern, right? Volume, you guys can see as we've been moving up, has been picking up. Again, I'll discuss that a little bit more in the stage analysis, but the price action has been good overall. Today's pullback is going to be a bit of a concern. All right, taking a look at it in terms of its daily time frame, you guys can see we've got this bearish engulfing candlestick pattern, right, which is often a sign of a reversal to come. So I do anticipate a little bit more downside. You guys can see we closed today at $259.46. We dropped a little bit more after hours. So it definitely is a short-term bearish signal that we have more downside to come. Today's volume, you guys can see it's a very strong volume that we got this pullback with. So again, a little bit of a concern for bulls, but overall it's not it's not the end of the bull run, right? It could just be a correction, and we'll get more into that when we talk about the Elliott wave count. In terms of the daily EMA that we're looking at the 21 EMA. As long as we are above this, we are, we're in good shape. We're still bullish because it can come all the way down to this 21 EMA and bounce off of it, right? And that would take us all the way down to right now around $235. Now over there, we also have this gap that we left as we were running up. So there's a very good chance, given that our 21 EMA is around this level, that we can come down to this area and then find buyers, right? This gap is going to act sort of as a demand zone, and there's a good chance that we'll find buyers over here, and then from there we will bounce off of our 21 EMA and we can rally higher, right? But so short term, there's definitely the possibility that we can go lower from here. All right, so that's our basic price action. Overall, we are still in this bullish uptrend. We do have a signal for a reversal, but we do have support on the daily in terms of our 21 EMA, and then on the weekly, our 30-week moving average. All right. Okay, guys, so the next thing I want to go over is Stan Weinstein's stage analysis. I will show you guys a picture that basically gives the a summary of what it is. But essentially what you have is you have stage one, where basically after a long downtrend, we kind of consolidate and form a base. Then stage two is where you get the breakout and a rally up. Stage three, you kind of consolidate at a high level, and then stage four is you drop again. All right, so I'll show you guys that picture. But now what's really important in analyzing the stage analysis is going to be the 30-week moving average, right? 30-week simple moving average. All right, so usually you guys can see that in stage one, you're gonna get some sort of consolidation right around your 30-week moving average, right? So usually you're gonna be trading under it, kind of hovering around that 30-week moving average, and that you guys you'll know basically you're forming your base from which you're going to get a breakout. Usually towards the end of that, the volume starts to increase a little bit until you finally get that break above the 30-week moving average, which we did over here, right? So we broke above our 30-week moving average, and then we confirmed it with a follow through more volume as well. All right, so we are definitely in our stage two. Now what's going to be really important is that as we have broken and we've rallied above here, that our 30-week moving average is going to start moving upwards, and this is going to act as our support now, right? So even if we start to fall back a little bit, we should be making higher highs and higher lows off of our 30-week moving average, right? So in terms of the stage analysis, we are looking good. We've formed our base, we broke above it, and this is going to be a really good sign of a further rally to come, even if we get this pullback, which is going to be most likely a correction. Okay, so in terms of the Wyckoff, I think over here we basically have a form of reaccumulation, right? And it's not too relevant to the price action right now. This happened already, but if you believe in the fractal nature of markets, then you know that what kind of happens on a larger scale is often happens on a minute scale and vice versa. So I believe what happened over here will happen again, right? So in this little rally right here, we've basically been moving up, reaccumulating, moving up, reaccumulating, moving up, reaccumulating on a smaller scale. So on a larger scale, you guys can see we did the same thing. We moved up, we reaccumulated over here, and then we jumped over the creek, broke resistance, and then we rallied higher. So there's a chance that we do something similar, right? We reaccumulate now at this higher level, and then we break resistance, and then we rally higher. All right, so that's no different really than a bull flag breakout, right? That's really what this is, and that's something that we called out a while ago when it happened. Right, so over here we have a clear bull flag, and we got the breakout. Right, so this was our pull right here, and this was our bull flag. We broke out around $192, and I gave you guys a price target of $310, which is also a key resistance level that we're going to talk about, based off of a 1-to-1 of the pull and then the breakout, right? So basically the distance of the pull is going to be the same distance of how high we can go. Another way you guys can measure that is by using our fib extension tool, right? So you're looking for a 1-to-1 from the area of the breakout, which takes you to roughly around $308, $310, right? Which is a key resistance level, which is what we're going to talk about next. So over here I have in green, the green dotted lines are basically major resistance levels, and I have two minor resistance levels over here, and you guys will find out why those are major and minor in a little bit. But essentially we have a resistance over here around $290. We have this major resistance. You can see we have 1, 2, 3 rejections at this level, which is around the we'll say 314 area, and that's kind of like with that 1-to-1 target that we're looking for from the flag breakout. Another minor resistance over here around $360, and another major resistance at 384, 402, and then our all-time high of 414. All right, so those are gonna be key resistances. In terms of support, anything that was a major resistance before is going to act as support now, but I really don't like to use horizontal key levels for support. I prefer relying on our dynamic supports in terms like of our 21 EMA, or using ascending or descending levels like trend lines. But basically over here we have support now at 250 area, 255 I would say. That's kind of like where we broke through in this gap. We'll have another support at around 237 and another support at 220. But again, I'm relying more on our 21 EMA for support and our 30-week moving average for support as well. All right, in terms of supply and demand zones, we can go to a 4-hour or a 2-hour chart. I'm only going to talk about more recent demand zones on a smaller time frame, because those are areas where we can bounce, right, where buyers can step in and end this bleeding essentially. So it looks like we have a major demand zone around this area here. Okay, this will be a demand zone. That's where we had our first rally. Let's go to 4-hour chart. Okay, so this is where we have a demand zone. We can come back into this 245 to 250 area and look for for the candle to come in, wick out, right? So as soon as we come in, buyers step right into this area and push us higher. And then in terms of a supply zone, we're going to have a supply zone up here, right, which is where we basically started this sell-off today. So we can run back up over here, and there'll be sellers waiting over here for us to push the price back down, and that would end up forming a sort of double top pattern, right? So that's like a very brief supply and demand zone in terms of where we are right now. Those areas can be crucial for buyers and sellers. Alright guys, let's take a look at our pitchfork now. So we're going to basically draw this from the bottom of what would be our wave 1 to the top of our wave 1, and then our third point is going to be the bottom of our wave 2. And this pitchfork is basically going to show us where we can find areas of support and resistance going in an ascending channel. Alright, so I kind of like to use it in a way where I'm looking at these 4 quadrants, right? So right now we're kind of in this quadrant right here. So as long as we bounce over here, I could still see us moving up and down in this channel, forming higher highs and higher lows. If we break out, if we break down into this quadrant, then we're looking for this bottom line of this pitchfork to provide support on a rising channel. Likewise, if we can come back up here and break this median line, then we're looking for ascending levels of support and resistance in this pitchfork in this third quadrant, and then this fourth quadrant if we break into that, right? So that's kind of how I like to use that. As you guys can see right now, it's no coincidence that we really came very close to this median line, in my opinion, and that's where we kind of got rejected in a sense, and we've been selling off. So instead of, like I said, horizontal lines of support, I would also prefer to use this pitchfork and see if we could find some sort of support at this level, again around the 245 to 250 area. That's also going to be a strong demand zone as well. All right, now besides that, we also have our channel. We can draw a parallel channel like that. Okay, now this channel, this is kind of what we use more in our wave count. We kind of broke out above it, and I do think we're going to push higher, right? And which is going to confirm our third wave. Like I told you guys in a previous video, if this were a C wave, it would be contained in this channel. A third wave will break out of it. We did break out of it. We pulled back really fast, right? It was not really a clean break in my opinion, so we need to get out of that in order for this third wave to continue to rally. But that's another level of support and resistance that we can use in a different sort of angle as opposed to the pitchfork. It's actually very similar to the modified shift pitchfork. So you guys could use regular pitchfork, or you guys can use the modified shift pitchfork. You can see it's pretty much like a parallel channel that we would use in terms of Elliott wave. All right, guys, so over here I have our wave count on the chart, and I want to make a quick correction to previous videos. In previous videos, I basically said that this top over here was our third large degree third wave, right? Our macro degree third wave, and this was a fourth, and then we should be getting a fifth wave higher. I've gone back and looked at it, and I don't think that that's actually correct. I think this makes more sense as the entire first wave, right? In a larger degree, and then this move was a second wave, right? If we look at it from a fib retracement level, we came basically down to a 78.6%, which is a perfect level for a second wave retracement, and it's a little too much for a fourth wave. I think it did make sense at the time when I was looking at it, but I think this makes more sense as a larger degree count. So we have our first wave and we have our second wave. Again, the first wave can be broken down into 5 waves, the third can be broken down into 5 waves, etc., etc. Right, that's the fractal nature, and we're going to talk about that in a second. Then from our from our second wave retracement, then we had this this rally over here back in January is when it started, and we went all the way to 217. That's 5-wave count. We'll get into that in a second. And then we had this correction that ended in the end of April, and a WXY, and then we've been rallying higher. I told you guys that this could have possibly been a third wave or a C wave, and I'm convinced that it's not a C wave. Also now changing my count to a 1-2 over here, this definitely cannot be a C wave in my opinion, because if this were a C wave, then we would be looking for a 1-to-1. If this were a C wave, we would be looking for a 1-to-1 of this move, and even if we took this to 340, which would be the max that this C could go up to, right? Then we would be looking for so this would be our A wave, and then we would be getting A, B, C, and anything more than this would be more than 161.8%, which would not be a C wave in my opinion. So this being the max, then we would expect a 1-to-1, and that would bring Tesla all the way down to $30. I just don't think that that's very likely, guys. I don't think Tesla is going to see $30 anytime soon. So that's another reason why I don't think that what we are seeing over here is a ABC, right? With a A, and then this being a B, and then a C to the downside. Also, just how impulsive this is, like I've said in previous videos, this looks like it is a third wave move playing out. All right, so that's a little bit of recap on the larger picture. I think we can change this now, right? It's no longer a 1 or an A in my opinion. It's definitely a 2 or a 1-2, and then we are getting a third wave. I would say at least to $340. All right. We're gonna go into this micro count, and I'll probably change the background so you guys can see it a little bit better. But as you guys can see, this is our channel for this move now, and once we break out of this channel, that's kind of when you'll know that it really is our third wave. I wanted to mention this larger degree correction. All right, I'm going to this correction a little bit. Okay, so this correction from the all-time high at $414, there's a couple different ways that you guys can take this. It's not too important, but I'll just go over it, right? So I have this marked as an A, B, C for a W wave, and then we'll get an X wave connector, and then another A, B, and then a C, right, for our Y wave. So we have a WXY, right? You could also probably look at it as a 1, 2, 3, 4, 5 for a first wave diagonal. Second, right, that's our A is in a diagonal, and then we have a B wave, and then a C as an impulsive 5-wave move down. So as a ABC, that's fine as well. But the reason why I bring this up is because I want you guys to pay attention to this structure, right? So ABC, W, X, A, B, C, Y, right? And you guys can see that over here, I marked these levels as key resistances, right? So this B, this X over here, this B over here, and then obviously the top of this fifth wave, which was the top of this entire first wave move up, right? Now, if you guys take a good look at this first wave move up and then this correction, that is exactly what is playing out on the micro scale, right? So this is the idea about the fractal nature of the markets, right? Now, right, so you have your first wave up over here, right, which is similar to this first wave up down here, okay? Then you have your ABCX, ABCY. Same thing is playing out over here on a minor scale, right? We have our first wave up right here, okay, and then we have our A, B, C for our W, we have our X, then we have A, B, C for our Y, and then we've been rallying higher. Now you guys can see I have those same levels marked off. We have a B over here, we have an X over here, we have a B over here, and we have our fifth wave for this larger first, right? That's the exact same structure that we see in the macro count, right? 1, 2, 1, 2, A, B, C, X, A, B, C for the Y, 1, 2, A, B, C for the W, we have our X, and A, B, C for the Y. So it's playing out exactly the same, right? This fractal is playing out on the larger scale, is playing out on the minor scale. Now, why is that so important? Right, and we're going to get in the wave count for a second, but I just want to show you guys this. That's really important because if you guys go back to my previous videos and we were having this rally over here, right? As we were having it, I was telling you guys that I wanted to see a break of this B wave, right? You guys can go back and watch the video. I said a break of this B wave. Then I wanted to see a break of this X wave. Then a break of this B wave. Then a break of this high over here for this larger degree first wave, right? And as we played those as key resistances on this minor scale, right, and we got every single one of them, that's exactly the resistance levels that we are seeing now on the larger scale, right? I want to see us break this B wave. I want to see us break this X wave. I want to see us break this B wave and then this high at 414. It's the exact same thing. And because we had it play out over here on this minor scale, on this minor fractal, it makes me believe that we are going to see the same exact thing play out on the larger fractal, right? The same way we broke this B wave down here, we should break this B wave over here at 314, which is a major resistance, and which is where we believe we should get the breakout in terms of the bull flag breakout. Then the same way we broke the X wave over here, we should break it over here, right? That's really what I see playing out, right, in terms of the fractal structure. You really have to understand how fractal nature of the markets work. Now, whether that's because of human psychology or if it's because computer algorithms and buying and selling, how it works, I don't know. I don't think anybody really can know. But the fact of the matter is it plays out this way. You can find fractals within the price action. And if it's happening on this minor scale, I believe it's going to happen on this major scale as well. All right. Okay, so with all that being said, and over here, guys, you guys can do the percentage, and like we're about 80 points above this this wave one, right? So whatever percentage that is, I would use the same kind of math to find that same sort of percentage to go above this all-time high. That's where I think we are going at a minimum. All right. Now, let's just get into the actual wave count, and I'm going to switch over to a darker background because I think it makes it a little bit more easier to view. So we won't go over the macro structure. We'll just take a look at this. Let me hide. I'll hide our pitchfork. All right. So essentially, okay, so going back to January, right, and the start of this wave one, we had a 1, 2, 1, 2, 1, 2, 3, 4, 5, right, for that middle third wave, 4, 5, 4, 5, all right. That was our first wave. Again, we had this A, B, C for our for our W wave, another A, B, C for our X wave connector, and then an A, B, C for our Y wave. So we had our first up here, and then we had our second wave down here, and now this is the third wave move that we've been in. And I believe this count is correct. There may be another room for another 1, 2 in here, but I think for now this is what I'm going with. So we had our first wave, second wave, right? 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, and now what we're in right now is basically another fourth wave pullback. I think we should rally higher from here for another fifth wave to take us higher to around that $300 level, possibly even that 314. Like I said, it's possible that there's another 1, 2 in here, right? So maybe this is 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5, and then it would just elongate this pattern a little bit more, right? So essentially we have all these 1, 2s, and then we're now that we've completed the 3, 4, 5 over here, we should be getting 3, 4, 3, 4, 3, 4, 3, 4 to complete and close out this pattern. So moving forward, I think that we'll be having strong rally days like yesterday, and then pullback days like today. Strong rallies, pullback, strong rally, pullback, strong rally, pullback, right? I don't think it's going to be the real bulk of the move was in the middle right here, and I think that's kind of happened. Now it should be more so rallies and pullbacks as we stair step higher. If I zoom in a little bit on this move today, if this is our fourth wave of this degree playing out, then we would be looking at some sort of this, maybe a zigzag, right? So we have an A, B, and then we would probably expect to see lower, possibly to the previous fourth, right, which is around that 244, 245, right? That's where we have our demand. That would also kind of give us a 1, 2, 1, right around the 242 area, or the 61.8% extension is fine also for a C wave. Sort of truncated, but it's possible that's where we'll get our bounce around the 250 area, right? So that's where I think we have room to go down a little bit further, but if not, then we'll just say that this is our ABC, and then we should rally higher for a fifth. And like I said, this is probably more extended in here, so this is probably another 1, 2, 1, 2, honestly, 3, 4, 5. I'm working this count out with you guys, and I usually refrain from doing the micro counts because you can kind of really get lost in every zig and every zag, but sometimes it's helpful. So let's see if I have another 1, 2 here. Maybe this is 3, 4. Alright guys, so I think this looks a little better. So we have a 1, 2 minute, 1, 2 minuet, 1, 2 sub minuet, 1, 2 micro, 1, 2 sub micro, 3, 4, 5, and then 3, 4 back of the sub micro, 5, 3, 4 of the sub minuet, and then we should get 3, 4, the minuet, and then 3, 4, 5 of the minute. All right, if that makes sense to you guys, right? So essentially we have a 1, 2, 3, 4, 5. Third wave is made up of a 1, 2, 3, 4, 5. That third wave is made up of a 1, 2, 3, 4, 5. That third wave is made up of a 1, 2, 3, 4, 5, right? So it's just waves within waves, right? That's again the fractal nature of Elliott wave. So I do expect us to get a bounce. I don't think we're gonna pull back too much more. Like I said, possibly bounce around the 240 to 250 area. It's kind of hard to say. I would use this previous fourth as a good marker, right? A lot of times a fourth wave comes back to the previous fourth of a lesser degree, and then as you guys saw, we have demand zones over there, and we have obviously our EMAs, 21 EMA going around there. We also have the gap around this area that we would be looking to fill. Alright guys, so in terms of price targets then, you guys know we have the price target from the bull flag breakout that will take us around this level over here, around $310 to $315. That's, I think, the next major resistance that we're going to get once we bounce, okay? Possibly this minor resistance at around 290, but if we break that, then 315 level is going to be key, right? If we do the the 161.8%, we're looking at, like I said, I've been saying for a while, 340 roughly for this third wave move to top out. Now, the question is, what if we actually don't get to this level, right? What if we top out somewhere somewhere lower? So right now we pulled back around 279. What if we bounce and we get up to 297? Or what if we actually get rejected at this 1.382, right, which is a target for the bull flag breakout? If that were to happen, guys, and we were to finish this wave around over here, I think long term it becomes more bearish, but long term it becomes more bullish, but short term it will be bearish, right? So if we get a pullback over here and we start pulling back hard, what that would tell me is that instead of a 1 2 2 3, we're actually getting a 1 2 1 2 setup. In other words, it would be a very, very bullish move going higher, because this would be our first of our third, second of our third, and then we'll get a third of a third, which would ultimately be a lot more bullish, right? And that is definitely possible now, because we know this is our larger degree first wave, this is our larger degree second wave, right? So if we get to 161.8%, okay, I would still expect that for a 1 2 3 4 5, and then we get a 3-wave pullback before we go higher. Or we could get, if we pull back over here, then it's most likely a 1 2 1 2, and then we rally higher for a third, right? So again, gotta kind of just take it levels at a time. First, we have to bounce back, take this 290 level. If we could take the 290 level, we're looking to take out the 310 to 315 area, right? Also our target for the bull flag breakout. And if we can get past that, then the next target would be the 340 area. All right, so that's kind of what I'm looking at for right now. Right now the main thing is for us to bounce on the micro scale. You guys saw, like, we should be looking to finish up a minor fourth over here, and then a rally higher for a third, fourth, third, fourth, third, fourth, right? So that's kind of like what I think is playing out in terms of this wave count. You know, if we do pull back some more, we have support, so I don't think there's really too much need to panic right now. We're still looking bullish in terms of the wave count and in terms of the stage analysis and everything else, in my opinion. So I hope that helped you guys. I've tried to give you guys as much information as I can regarding this play. I still think it's going to be a really big play. I think the market is going to rebound in general, and I think there's still a lot more room for tech stocks and Tesla in particular. All right, guys, hope that helps. I will add the timestamps. I know it's a really long video, but if you guys have made it this far, then I really appreciate you guys. And if you guys liked the content, if you found it useful, please hit the like button down below, and please subscribe to the channel for more Elliott Wave breakdowns on your favorite stocks, cryptos, and commodities. I will be back with more. Peace.